Hello, Ben.
Hi, Aaron.
Good evening or good morning.
Good morning. Are we ready for the webinar?
Yes, I'm super ready.
Great.
Good evening, everyone. It's good to see so many people here today. I see that some people are raising their hands. Please use the Q&A for questions, and we will try to address all the questions during the webinar.
Yes, today we're going to go through the annual first algorithm and see and learn all about it. We're going to see some what's going on actually in the markets, what the algorithm thinks about the markets. So it's going to be interesting, and we have some surprises for you as well. So I think we're going to start in a few minutes. We're still seeing some people joining in. And of course, if you have some question during the webinar, feel free to ask us through the Q&A option, and we will try to answer as much question as we can. But anything you had in your mind, feel free to ask us.
The webinar is going to last for 1 hour and a half approximately. We are suggesting to stay until the end. I already went over all the slides. It's super interesting. The last slides are very important as well. So we really suggest to stay until the end. There are a few surprises that Ben prepared for you guys.
And of course, before we start, please read the disclaimer that you see on your screen. We're not providing a personal investment or financial advice to individuals. And of course, we are suggest to, of course, always consult a licensed financial advisor for using any of the forecasts or the strategies that you see in this specific webinar. So that's the disclaimer that you should read below. But we're going to show you some interesting things that we think about the market and what the algorithm thinks about some ETF and trends that are going to be strong in the next month. We're going to see some interesting stocks, and from even today's forecast, a few other surprises are waiting later on. We're going to start in the 2 or 3 minutes. We're just seeing more and more people joining in. So we want to wait for everybody. Meantime, you can write us in the. Meanwhile, you can write us in the Q&A if you think. What do you think about NVIDIA? Should buy it now, or that's the end, and we'll see. We'll see what the algorithms think at the end of this webinar. So write us in the Q&A. We'll see. A lot of different opinion about NVIDIA. Interesting.
Yeah. Yeah, some people are waiting for a correction. Actually, I met few friends that are waiting for NVIDIA to correct the price, to correct since 2020. But congratulations to all the people that holding NVIDIA right now.
All right, guys, again, if you have any question, don't raise your hands. Please write it in the Q&A, and we'll try to answer it during the webinar or maybe in the end of the webinar. So ask your question in the Q&A. All right, Yaron, I think we can start.
All right. All right. Oh, so many questions, so many comments about NVIDIA, about the Bitcoin, about AVGO. Wow. Yeah, we are experiencing very interesting market, Ben. I think during the last 6 months already. So yeah, are you ready to start?
Let's go.
Let's go. Okay. So as mentioned, we are starting our monthly webinar. We are going to cover during this webinar, we are going to talk about the recent opportunities that the I know first AI algorithm is identifying right now in this bullish market. We are going to talk about the most promising sectors, the most promising industries, and of course, we are going to talk about stock picks, some stock picks from several sectors that the AI algorithm is actually focusing on right now. Before I'm going to give the mic to Ben, I'm going to start with a quick introduction. I'm going to talk a little bit about I know first, about the algorithm, the brains behind the predictive algorithm. In order to be able to finish this webinar on time, please use the Q&A. We will not be able to open the microphone to you guys, so please use the Q&A. We are promising to address all the questions during this webinar. We're going to have like specific sessions to answer all the questions. So To start, I'm going to talk about I Know First. I Know First is basically AI fintech company. Our main solution is a predictive algorithm that generates daily predictions for the financial markets and identifies the most promising investment opportunities on a daily basis, basically. We are utilizing different AI approaches. We are utilizing machine learning, deep learning. We are using genetic algorithms to predict the financial market. Our predictive algorithm is generating daily forecast for over 13,500 assets from different asset classes: equities, ETFs, commodities, currencies, cryptocurrencies, interest rates, as well as world indices, with daily predictions for multiple time frames, short-term, mid-term, and also long-term. I see different people from different parts of the world. Our predictive algorithm is generating daily forecasts for over 50 global stock exchanges, including the stock exchanges in the US, which is the main focus of the predictive algorithm, of course, but also the stock exchanges in Canada, Europe, India, Japan, Korea, Australia, China, Hong Kong, you name it. Basically, every interesting stock exchange around the globe. The brain behind this predictive algorithm is Dr. Lipa Reutemann, a scientist from the Weizmann Institute in Israel, one of the leading experts in the field of artificial intelligence, machine learning, deep learning. Ben, can you hear me?
Yeah.
Yeah. Can you go to the next slide? Yes, thank you. So the brain behind this predictive algorithm is Dr. Lipa Reutemann, the co-founder of I Know First, one of the leading experts in the field of AI, machine learning, deep learning, PhD from the Weizmann Institute of Science. Dr. Reutemann is leading our unique R&D team that is basically based on PhDs, AI and machine learning experts. We have math professor from Tel Aviv University, as well as employees with the background of data science, computer science, math, statistics, physics. Ben Rubin is leading our advisory team. He used to work for Bank Hapoalim, the largest bank in Israel. And he is leading the advisory team and is also providing advisory services for institutional clients from all over the world, mainly hedge funds, family offices, banks. We are going to talk about the institutional service that we are providing them during this webinar as well. I'm serving as the chairman of the Israeli Export Institute, specifically the FinTech board there. I'm also lecturing for FinTech at one of the leading universities in Israel. I have more than 20 years of experience in the field of forecasting, predicting, and building systems to support the forecasting process. I used to work for one of the leading consulting firm here in Israel, and I was focusing on the field of forecasting, basically. I Know First algorithm is being trusted by the world's leading institutional clients, basically hedge funds, investment houses, banks, family offices, brokerage firms, as well as high net worth individuals, and also retail investors from all around the globe. In the list here, we can see several banks. We can see some famous hedge funds, family offices. We can find here one of the leading, I think the leading investment house here in Israel, as well as brokerage firms from all over the world, also from India and other regions around the globe. The solution that you're about to see has received several international awards from different entities, including UBS, entity data from Japan. We have received the WealthTech Award from the Geneva WealthTech Forum. Different entities, very interesting entities, and here you can see several pictures from the awards that we have received during the years. The solution that you're about to see is received also. You might see us also in the media, in different channels. With Ben, we are also providing fintech course right now at the Reichman University. You can see us here with our class. Yeah, and as mentioned, the solution has been also been covered in the media, Yahoo Finance, different TV channels. You can find all those coverage in our website. So what do we do? Basically, by using the algorithm, we are providing two main solutions. First, we are providing daily forecast to our clients. We can see it on the left side of the screen. Basically, before the market opening, the predictive algorithm is generating a prediction for the next coming days, for the short term, for the midterm, for the long term, with the best opportunities in the market. In addition, the algorithm is also generating prediction for the main indices. In this example on the left, we can see the prediction for the S&P 500 index. So this is the first solution that we are going to talk today. The solution that actually providing you the best opportunities on a daily basis for the different time frames. On the right side, we can see also our systematic solutions that basically managing a portfolio by using our predictive algorithm. The idea here is to convert the daily focus that we see on the left to a portfolio, to conduct the rebalancing within the portfolio on a monthly basis. And we are going to talk about very interesting strategies, and we have some very exciting news to release today as well about one of the strategies that we're going to see here. And the I Know First predictive algorithm includes three components that are available basically to everyone. To every one of you, those three components are available. The first component is the most exciting one. By using this component, you can basically identify the most promising investment opportunities in the markets today. Basically, by using artificial intelligence without any human intervention, you can identify opportunities for long positions. You can identify opportunities for short positions, and basically to generate trading ideas that can help you to start your own research process, or you can decide that you are using the AI as the main idea generator to your trading process. And so besides the opportunities that the algorithm is identifying on a daily basis, it's possible to receive daily stock market intelligence by using the I Know First predictive algorithm. Here, it's possible to identify leading sectors within the market, leading industries within the market, to get information and intelligence regarding the directions of the main indices, which index is supposed to lead in the near future, which index we should avoid, and also which sectors and industry we should avoid. Stock market intelligence about the volatility in the market, prediction for the VIX and other volatility indicators, predict daily prediction about the interest rate, the 5 years interest rate, the 10 years interest rate, 2 years interest rate, and basically, and also to identify promising regions beside the US market to reveal promising regions around the globe that we can track by using simple ETFs, and also regions that we should avoid in our trading. The third component is basically the option to receive a customized forecast based on each client's portfolio. Here, we are providing the assets that that each client that are part of each client portfolio. And our I know first predictive algorithm is generating the forecast for all the assets within this portfolio. And basically, by combining all those three components, we can maximize our portfolio returns. We can identify opportunities on a daily basis. We can remove the assets that have a negative prediction, and we should align, and we should utilize also the general picture of the market as the AI algorithm is the picture that the AI algorithm is building right now. So how we do that? Basically, the I know first predictive algorithm is collecting a huge amount of data that's coming from the entire financial market. We are utilizing information and quantitative data that's coming from the different stock exchanges around the globe, more than 50 stock exchanges. We are collecting data that's coming from the interest rate environment, the commodities market, the currency market, the cryptocurrency market. Everything that is being traded around the globe is being used by our algorithm. We are adding the daily data to our database. We are managing database with historical data. And around the clock, the algorithm is basically building, by using our technology, the complex network that exists in the financial market, basically. The hidden correlation sets between the assets, and this network is being built without any human intervention by using our technology. In this network, you can find of course, the correlations between the different assets within the financial market. This network is being built from scratch on a daily basis and being updated basically every day. Before each trading day, the predictive algorithm is generating the most updated prediction for the different time frames, for the short term, for the midterm, and also for the long term. You can see the time frames on the right side of the screen. And we are providing those predictions for all the different assets, equities, ETFs, commodities, currencies, basically on the same time. The algorithm is also, of course, learning from each forecast. The algorithm is learning from the successful forecast as a self-learning algorithm. Also, the algorithm is learning from the failures. And basically, this is part of the information that the algorithm is digesting on a daily basis. In terms of the technology, we are combining different AI approaches: deep learning, artificial neural networks, genetic algorithms, supervised and reinforcement learning. The most interesting thing about this predictive algorithm, and we're going to talk about it during this webinar, is basically the ability to separate and to focus on the most predictable assets from each investment universe. So if we are going to discuss the S&P 500 universe, the algorithm is able on a daily basis to separate and to filter out the assets that are not predictable. There are some assets that are not predictable. We are going to talk about that as well. And always to focus on the most predictable assets on a daily basis, basically. And now, Ben, this is your time, Ben. This is your moment. Tell us what we see here.
Yeah. Okay, I'm going to talk about a little bit about the forecast and how we're going to use it. I see a lot of questions on how to use the forecast, all the time frames. We're going to go through it, so don't worry. But let's get to know the forecast and how it looks. So the forecasts come in the shape of a heat map, as we can see here. In the title, we can see the time frame which this specific forecast is referring to. For example, this forecast is for 3 months. This is an old forecast. And we can see the green cells that represent long position. We can see the red cells that represent the short position. And we see in each and every square 3 elements. We can find the symbol of the stock in the top of the square. We can find the signal, which represent the predictive movement of the specific asset. It's actually the potential movement that the asset has. This number or index is actually our internal index, and it goes throughout all our assets, through all 30,000 assets, and it helps us to rank it from the best, or the one with the higher signal that is in the top left of the forecast, which means has the highest predictive movement from all those assets. And it goes down to the right up until the one in the bottom right that has the strongest signals to go down, or the biggest signal to short on from this specific heat map. The other indicator is the predictability that we can find on the bottom left of each and every square. This is Pearson correlation measurement. It moves from -1 to 1, and it's actually tells us how good the algorithm can read this specific asset, how good it can predict this specific asset. For example, 0.0 gives us around 50% probability that the algorithm can actually read or forecast this specific asset and its direction. So while we're choosing stocks from this forecast, or generally from forecast, we are looking for higher numbers of those 2 indicators, the signal and the predictability. And I'm going to show you a few examples to make it a little bit more clear how using those 2 important indicators. So after signing in, you're getting this specific look of forecast. We have 6 time frames. All the packages have 6 time frames, as we can see here, from 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. As I said, we have the best opportunities for long, as we can find them on the top of these tables, and the best opportunities for short or sell, that we can find them on the bottom. This specific forecast is belong to the top packages, for example, top 10 or top 20. In these specific packages, we also have a forecast about the index itself, as we can find here, about the S&P 500. We can find it in each and every time frame, the specific forecast for the index, so we can know the general movement or the general direction of the index, if to go long or short. That's going to help us choosing going long or going short. So we have 6 time frames. Again, after getting the forecast, you can switch between the time frames by clicking on the 3-7 days or the 1-3-12 month by going through the shorter time frames to the longer time frames. Okay, so I'm going to present you a few examples from the last days, and we can find here the forecast for 3 days. We can see the date or the time frame up and in the top of each and every forecast. This specific forecast was generated on the 29th of February, and the algorithm gives us the best 10 stock to invest in for this time frame from 3 days. And to the right, we can find the results of those stocks that the algorithm actually suggested us. In the bottom, we can find the INO first average, the average of all of this performance. And we are always comparing it to the benchmark. In this case, we are comparing to the S&P 500. We can see that in those 3 days, the S&P did 1.3%, while our average made 4.24%. Here we can find a variety of stocks, eBay, of course, Tesla, MU, and technology stocks, basically, that we can see here. Again, we can find the signals, I remind you, in the middle, and the predictability on the bottom left of each and every square. We are always looking for the highest predictability level and highest signals to get the best stocks out of the forecast. So this specific forecast is for 3 days. This is also for a forecast for 3 days, was generated on February 27. And we can find a variety of stock, again, NVIDIA, Bitcoin-related stocks, as we can find here, CDNA that made a significant return in these 3 days that the algorithm suggests us to hold those stocks. And now we're going into the longer time frames, as we can find here. This is the 7 days forecast. We can find some pharma stock and biotech stocks that the algorithm suggests us to buy for 1 week and hold for 1 week. We can find the BEAM, CRL, and FDMT. We can see that the average of this specific forecast was 16%. Again, while the S&P in this week made 1.45%, we can find some not successful predictions, as we can find here, VCEL. In this specific stock, the algorithm, the direction of this specific stock went to the not to the as the forecast of the algorithm gave us in the beginning of in the 20th of February, for example. So out of those 10 stocks, we can find 2 stocks that wasn't successful predicted. Again, if we are going a little bit in the longer time frame, we can find that in the 14 days was generated on the February 14. We can find stocks as CLSK, as TRMB that's related to the tech sector, CLH that made a significant return this year, and for example, we can also see here the S&P 500 forecast that the algorithm gave to these top packages. We have a variety of stocks from the entire US market in this specific package that the algorithm is actually choosing for us in each and every time frame. If we're going or checking the 1 month, we can find the signals and the predictability level, as you can see, going much higher. For example, in VINC, in this specific stock, we can see that the predictability level is around 0.5. That means that we have a 75% probability of this specific asset to move to the predicted direction. We can find the signals, of course, again, in the middle of each and every square. And we are trying to focus on the best signals and best predictability levels. I personally give more weight to the predictability filter, and I'll show you why in a few slides. But both indicators are really important, and we can see that in 1 month the algorithm gave us almost 40%, while the S&P gave us 4.71%. For those that like longer time frames, for 3 months, for example, this is my favorite time frame, by the way. And here we can see that the predictability indicators are in much higher rates, 0.75, which means above 80% the probability to move to the right direction. And we can see that the stocks that the algorithm chose for this specific time frame of 3 months, this was generated actually on December 1st, and it's up until March 2nd. That was 2 days ago, as we can see, and we can see the return that the algorithm made in this specific time frame. And of course, we also have the 1 year forecast. Again, those are the 10 stocks that the algorithm suggests us to hold for 1 year, and we can see the significant return that we've made in that year since February 27. So as we were talking about the long position, the algorithm gives us another direction or what not to, or where not to be in, or what we can short. And Yaron is gonna elaborate about that. Yaron,
okay. Yes. So as Ben mentioned, each prediction that is part of the top 20, the top 10, or the top 5 package includes, besides the stock picks that the algorithm is basically identifying, or the opportunities that the algorithm is identifying for long or short position, there is another important element that is also actually available to our clients. And this is like a stock market intelligence component. This is the daily S&P 500 forecast. In some cases, in some situations in the market, this S&P 500 forecast is positive. For instance, as we've seen last month. However, in some situations in the market, there is a negative prediction for the S&P 500. We can see it on the right side. And therefore, we should focus on the assets to short sell, the assets that are located at the bottom of the heat map. And here we can see a few interesting examples. 2023 was a positive year in the market, but some of you might remember that during March, we had a very, we have a crisis in the banking sector. In the US, Silicon Valley Bank collapsed, Signature Bank collapsed, several other banks have collapsed. And here we can see an example from the beginning of March. Remember, the date is always in the top part of the heat map. We can see the negative prediction that the algorithm had for the S&P 500. And among the assets to sell or to short sell, we can find Silicon Valley Bank, as well as other tickers that are representing companies from the financial industry, like FRC, as we see here. We can see that people that have shorted those 10 stocks made a nice return of 18% while the market was going down. So this is one opportunity. And the second one, we can see that by the end of March 2020, the algorithm had negative prediction of the market. We all remember what happened around the end of February 2020. We started to hear some news that coming from China about some mysterious virus. And we can, but the market was basically still positive back then. However, we started to see some negative predictions and negative indications regarding the market. First of all, we saw negative prediction for the S&P 500, and the asset with the strongest signals came from the negative side. And here we can see several stocks that made a very strong movement on the short time frame. Generally speaking, usually when we have short signals, the short movements are very short also in time, and they are very violent. We have like a very sharp movement in a very short time. Talking about Silicon Valley Bank, we can see that we started to see negative indications about Silicon Valley Bank already on the beginning of March, and even on 19th of February last year. Silicon Valley Bank has collapsed around 11th of March, but we started to see negative indication about the banking sector in general, about Silicon Valley Bank, and about Signature Bank already around 19th of February. So this is a very strong use case. The market is not always going to the positive side. And here you can utilize the signals and the predictions that the algorithm is generating in order also to avoid drops in the market. If you have long only approach, you can just sell your existing positions and wait for a better opportunity to come again to the market. Or if you have the option to sell short, you can take advantage of this negative prediction and to short sell the assets that the algorithm is basically identifying, as we can see in this example. And even in this positive market, in 2024, in this bullish market, there are also opportunities based on the assets that the algorithm was actually that the algorithm had a negative prediction on. We can see that on the beginning of the year, in January 2024, the I know first AI algorithm had a bearish prediction for China. We can find here FXI, this is China. We can find here GXC. We can find EWH, which is Hong Kong. And we managed to see that during the beginning of 2024, those assets, those markets basically were moving to the negative side. So I'm suggesting always to go over also the negative side and the assets that are located at the bottom and try to build the story of the market for any given time. So if you have the ETF prediction, it's a very good tool to build the story, not only based on the opportunities on the positive side, but also based on the opportunities that we see on the bottom of each heat map. Another very interesting example is the negative forecast that the algorithm had for clean energy, TAN, T-A-N, the clean energy ETF. Since the beginning of 2024, despite the positive prediction for the S&P, the tech sector, the AI algorithm had a negative prediction for TAN. We can see it right here on the bottom, next to China, by the way. And since the beginning of the year, this specific sector had outperformed tremendously. If you're comparing it to the SPY, you can see the numbers right here. I think more than 50%, right, Ben?
Yeah.
So if the year-to-date performance, if you're taking 10, you can see that the year-to-date performance of 10 until today is minus 19. And if we're comparing it to the SPY right now is almost 8% as we speak. So we have almost 30% difference. And it's so important, you know, it's so important to focus on any given time on the right part of the market, on the right sectors in the market, and to avoid the assets that are not supposed to be to have a good prediction. For instance, if you're holding solar stocks, clean energy stocks, it's in 2024, in the beginning of 2004, we had a very clear prediction to avoid those type of stocks and to focus on technology, to focus on semiconductors. We are going to talk about several sectors that we had a bullish prediction on, but we were suggesting to avoid exposure to China, to avoid exposure to clean energy. And it's very powerful tool that's helping you to focus on the right sectors and on the right stocks, on any given time, basically.
Okay, so I'm gonna show you some examples of the time that the algorithm give the forecast at. Of course, in a very popular NVIDIA, we can find a really strong, I think the strongest forecast and signal that we can find on January 17, 2023, and for a 1-year forecast, and we already know what the stock made up until in 2023, up until 2024. And we can also find another forecast, positive forecast in 2024 on NVIDIA, as we can see here to the right, and many others semiconductor stocks that I'm going to talk about them soon. So timing is also important, of course, for all the investors, and we know that the algorithm gives us a pretty good timing. For example, if we're checking AMAT, also a semiconductor stock, this forecast was generated on 27th of November. Actually, the market the stock actually went down a while after giving that forecast, but in a 3-month time frame, we can see that the return was pretty good, as we can find here in 35% in 3 months. Another a quick example is for MGNX stock. Also, we can find the specific timing that the algorithm gave the positive forecast for MGNX. And although the stock went down a little bit right after it, in a 3-month time frame, the algorithm made almost 115% in 3 months. So timing is really important, and the algorithm knows to time the exact stocks and the timing of those stocks, when to buy it, and for how long we should hold it. And as Yaron mentioned, from the beginning of the year, we in our annual report of the best assets that we have for 2024 in the semiconductors sector, those two were the most strong stocks that the algorithm suggests to buy in 2024, and we can see the returns from the beginning of the year. ASML is with almost 31%, while Nvidia, of course, with the 66%. So focusing on the best stocks and the best assets, of course, this specific whoever bought this annual report, seen the other sectors in ETF that the algorithm gave in the beginning of the year, and it was really successful up until now. And I saw a few questions about what the forecast says today. We show you the past, but again, this is Yaron. I didn't tell Yaron, but I took today's forecast from 2 packages.
Come on, Ben, you're doing it again. Okay.
The aggressive package, which of course has the more volatile stocks, and that I'm just showing you the first stocks that was in the first place of the signal that we can find here, JAGX. And right now, or I don't know right now, but in the beginning of the webinar, it was up with 68%, starting with 68%. And another stock that the algorithm gave us from the top 20 package, actually. The top 20 package, again, taking the best stocks from the entire US market. He gave 2 strong recommendations for MSTR, which is actually Bitcoin related company. And this stock went up for 20%. And in the short side, as Yaron mentioned as well, we have to always look at the short side as well. We find the CNXC, which went down by 2% up until the beginning of this specific webinar. And so this is an example for the 2 different packages and the importance of the signal and the predictability. As we can find it, we can see really strong signals for those specific stocks, especially in the aggressive package, presenting us high volatility, but also good opportunities we can find again in those 2 packages. JGX, by the way, is a biotech company, and if I'm checking right now, I think it's around 60% up.
Yeah. By the way, Ben, the most fascinating thing about this prediction, if you're already sharing it, that it was sent yesterday. You can see the dates on the top part of the heat map. This prediction was sent yesterday, Sunday. Actually, it was on the night between Saturday and Sunday. Our clients have received it to their email 1 day before the opening. And yes, there are some opportunities here for long position, some opportunities also for short position. This is not an investment advice. Those assets are very aggressive. We are just using that as an illustration in order that you guys will understand how to utilize the predictive algorithm. It's possible to adjust the risk level based on your preference. We can focus on S&P 500 stocks. We can focus on S&P 100 stocks. We can focus on Russell. We can focus on aggressive stocks if we wish. We can focus on ETFs in the very same process and the very same daily update based on your preference, basically.
Yes, and of course we can find a date here that was generated on March 3rd, as you said. And of course you would be able to buy before the today's trading day. And did that significant return. As also, besides stocks, we are also providing a forecast about the ETF, which I found really interesting. In this ETF package, we can find diverse ETFs, a lot of ETFs that the algorithm is supposed to buy for different time frames. Here we can find for a forecast for 1 month. We can find assets as the TQQQ, which is the elaborate NASDAQ. We can find the ETFs such as the XLF, which is the finance, which was pretty good this month. XHB for the home builders, for example, that the algorithm still like, and we're going to see it at the end of this webinar. XLK, the technology sector, and we can find those main sectors here and the return, and comparing them, of course, to the movement of the S&P 500. In the same way, we can find those for those specific ETF for a 3 months time frame as well. We can find the insurance company, KIE, and many other ETF that the algorithm gives us on a daily basis. And those for people or investment that doesn't want to buy a specific stock and want to hold an amount of stocks or a group of stocks that related to specific investment universe, this package is basically for you. Just buy the ETF, and the volatility is lower than stocks, of course, and you can make interesting returns in different time frames.
Some of them also providing dividends, by the way.
Yeah, of course. So in this specific universe, if we're talking about the sectors, the S&P 500 is actually divided to 2 different levels. The level 1 is actually giving us the 11 main sectors that are presented in the S&P 500. We can find there, for example, the XLK that we just saw, XLF, which is the financial sector, XLV, it's the health tech sector. And we can also find the level 2 in the S&P 500 industries. There's a 24 industries that the S&P 500 stocks are related to. For example, XSD, it's the semiconductors industry. XHB is the home builders. KRE is the regional banks. And those 24 industries belong to those to the 11 left big sectors that we see right here on level 1. For example, XSD is related to the XLK main sector, and upon those sector industry, we are building different automatic strategy. I find it really interesting. I'm going to show you a few of the strategies that we are doing with the algorithm, utilizing the algorithm. But before that, a few notes about those strategies. The strategies that we're going to see here, all the stocks in there that belong to the S&P 500 only. We're taking stocks, the algorithm actually chooses stocks only from the S&P 500. We are trying to use the best predictability indicator, and we can find here in this specific charts, we can see that the importance of the predictability. This is the same strategy based on different predictability levels. For example, the blue line is the best predictability, best 50 the 50 stock that has the best predictability indicator. The charts that on the bottom has the lower predictability level. So this is why we always suggest to focus on the best predictability, the stocks that has the highest predictability level in the forecast. And we can see those examples again right now in the strategies as well. So all the strategies, as I said, based on the S&P 500 index. I mean, we are choosing the best stocks out of the S&P 500. We know how to focus on the best stock. The algorithm actually does it the best. The S&P 500, of course, the ones that doesn't know, is actually the biggest 500 companies that are trading in the US market. And this, also in institutional point of view, is actually the benchmark to compare all the strategies that we do. For example, if we are saying we did like a 20% this month in our strategy, it doesn't mean anything if the S&P actually did 30%. So we always try to beat the S&P in our strategies, and this is the benchmark that we are relating in our strategy. Also, of course, who doesn't know the S&P, you can buy the SPY ETF that follow this specific index, and we can see that the return that is actually made in 30 years, almost 1,000% return, which is a lot for 30 years. And again, we are going to show you how we're trying to beat the S&P in each and every month, each and every year, and see a few strategies. Like the high performance strategy, for example. In each and every strategy, we are doing a monthly rebalancing, which means we are buying the stocks once a month and holding it for the entire month. And those performance that you're going to see right now are spreading on 3 years from 2020 up until 2024. And we have different kind of strategy to different kind of clients that we have. Some of them are looking for the high performance strategies, as we can find here. And some of them are looking for the low volatility strategies, as we can find here in the low risk strategy. The overall return of this high performance strategy in those 3 years was 370%, while the S&P made 33%. So as you can see, we are targeting high performance, high risk, high performance, of course, of this specific strategy. And we have 3 other different strategies that we're going to show you today. For example, the long short SPY strategy, which in this strategy we're just focusing on longing or shorting the S&P 500. Each and every month, the algorithm gives us his recommendation for long or short on the S&P. We have a long only strategy as well that a lot of our institutional clients like, which in this specific strategy we are focusing only on being long and not shorting the entire strategy, the entire time frames, all the time frames that you're going to see. And long and short industry or sector strategy, which I found really interesting. And I'm going to show you a few examples of this specific strategy right now. So as I said, all the S&P 500 is divided to the level 1, big 11 sectors, and the level 2, which is 24 industries, such as the retail, the home builders, banks, insurance company, and etc. And we built a strategy that in each and every month, the algorithm actually gives us one sector to focus on for long position or short position. For example, in 2020, the algorithm told us, as we can see here, go long on the XLF for this specific month, for the entire month. In the next rebalance, we can find here you can see a red arrow, which means short. It told us to short the real estate sector, as we can find it here, and that's how we made that significant return and gap over the S&P. In the next rebalance, it told us to buy the XLK, the tech sector, be in the XLK sector, the technology sector, back to XLF and XLF, XLI, and we can see that each and every rebalance, the algorithm tells us to be in the right sector. And we're not just using that in strategies, you can also of course, we're using it in the forecast as well. The algorithm is choosing the best stocks from the sectors and industries that it finds. So even in your forecast, for example, in the top 10 or top 20 forecast, you're getting the best stocks from different sectors. Here we can find again in the year 2021, every month or every rebalance, the algorithm tells us in which sector we should be in for all the 3 years, even in 2022, which was pretty volatile, as we remember. And we can find the sectors that the algorithm told us to be long or to be short in every month. And even in 2023, if you remember, and what Yaron talked about in the beginning of this webinar, we talked about the short that we made on the financial sector, XLF. We can see it clearly here. In this position, we went short on the financial market, and while the market went down, our strategy went up and made a significant return and outperformed the S&P 500. So again, we can find this specific portfolio that on this specific strategy, we also have live portfolio that we are running. The last 3 bonds that we have was on February 7, and we can see the return that the algorithm have. And this specific strategy have 3.45%, while the S&P made 1.8%. This is from the February 7th. And by choosing only the industrial sector that we can find here, XLI, we succeeded to outperform the S&P 500 in this specific month. It's not over yet. I mean, the rebalance, the next rebalance is on the March 6th. So we have 2 more days to these specific.
Yeah, right now XLI is up by 0.4. It's outperforming the market by 0.4%, basically, because the market is basically flat right now.
And I'm going to present you another interesting strategy that we have, one of the most popular one to their institutional clients. Here we are finding the algorithm actually gives us the best 3 industries to go long or short, as we see from the level 2. And this strategy made an astonishing 484% in those 3 years. And again, by choosing the right industry to be in, for example, in the beginning of 2020, we have shorted the retail, the real estate, the communication industries. In this specific time frame in the 2022, in November, we were longing on the banking, the capital markets, and telecommunication again. In 2021, we can see the same different rebalancing that the algorithm tells us go long or go short on specific industries and help us to outperform the S&P 500, which is our main target, of course, in those strategies. And in 2023, we were shorting, of course, the regional banks. We can the banks, sorry, that we can see here, KBE, the real estate, and the insurance company. And we can see that also the algorithm gives us in which exposure we should short those specific industries and the return that they made in this specific time frame that we see here. And that's how we actually succeeded to outperform the market each and every year. And even right now, we can find, I give you an example for December and January portfolio. While the strategy almost doubled the return of the S&P in December, and even now in February we are, I think it's even more than that. We can see around 4.5% and 1.08% of the S&P. That we see that those 3 industries that the algorithm chose was XHB, the home builders, XHE, healthcare, and capital markets. Those on the 3 sectors or industries that the algorithm tells us to focus on this specific month. It's a really easy strategy to manage. Just buy 3 industries or short them. So really popular, really interesting strategy that I like. And one of our last exciting news that we have, one of the biggest investment houses in Israel, which is called Meitav, bought one of the strategies, and we're gonna make a fund out of it, which is supposed to be launched in the next few weeks. And we are really proud of this specific collaboration that we have with Meitav. It took a while until that we designed with them. They have really specific needs for their strategy. And all these strategies, of course, can be customized by our clients' needs. So this is one of the interesting and I think popular strategy by being long only in the strategy, long all the time. Even if we can see on 2022, being long was a hard mission, and we can find that we also, of course, outperformed the S&P 500 in 2023 and also in 2022, and we can find here. And this is the quick view of the stocks that were held in this specific portfolio. As I said, in this specific strategy, the algorithm chooses 40 stocks to hold. Every rebalance is choosing the best 40 stocks out of the S&P, and we can see here some of the stocks that the algorithm actually chose in the February 7. We can find LRCX, we can find AMAT that I talked earlier, URI, CRL, from different investment universe, different sectors. LRCX and AMAT are from the semiconductors, CRL is from the biotech, IDXS is pharma, MHK is the home builders. We can find a lot of stocks from a variety of sectors that the algorithm is actually focusing on. And this specific strategy made 8% up until today, while the S&P did 3.3%. And I actually can show you, maybe we can show them the live portfolio.
Yeah, go for it, Ben.
Let's
I think it's going to be interesting.
All right. This is the live portfolio for the 2020 stock. And I think it's, besides doing 9% this month, while the S&P did 3.25, I think this is what's interesting. While the S&P is actually not moving today or right now, we had a 0.35 return above it if we are taking all those 20 stocks. So this is really interesting and thing that we are really proud of. This is just the 20 stock that the algorithm suggests us to focus on the beginning of the month in February 7, and we can see the results of those stocks. Of course, not all the stocks went to the right direction, but most of them.
Yeah, the overall return is amazing. Ben, you being modest here. It's your turn to be modest. Usually you're telling me to be that I'm modest, but we need to understand what's going on here. The predictive algorithm was able to focus on the good part of the market during the last month. It was able to choose the right stocks from the entire 500 S&P 500 stocks, that being outperformed the market almost by 3 times since the rebalancing date, since February 6th, right, Ben?
February 7th.
February 7th, yes. In this table, we can see the tickers that the algorithm chose, the S&P 500 specific stocks that the algorithm chose. We can see the unrealized return since the rebalancing date. And we can see also the daily change of each stocks, and we can see also the weight of each stocks within this portfolio, and we can see if it's a new stock or if we're maintaining a position from the previous month. Over the last years, the main triggers, the main contributors to the S&P 500 performance were the giants, were the magnificent 7 stocks: Nvidia, Apple, Amazon, Meta, and so on. Right now, we believe that the market is going to be, the contributors are going to be different. The contributors are going to come from the tier 2 companies, tier 3 companies from the S&P 500. And I know first AI algorithm is an excellent tool that can help assist you to identify those opportunities basically on a daily basis, as we can see here, or it can be also on a monthly basis. Here we built a monthly portfolio without any intervention on the daily basis. So we just pick on the beginning of the month, we pick the best opportunities that we should buy and hold for the next month. We are not making any adjustment during this month. And we can see the amazing performance of those assets until actually we can see the performance right now when the market is basically flat. We can see that the algorithm is outperforming the market by 0.3% right now as we speak.
Yep. And by the way, the level 2 strategy that I talked about, we almost doubled the performance of the S&P from the beginning of February 7 by just picking 3 stocks. One of them, industries, and one of them was the home builders, which has, as we can see, the highest weight that the algorithm gave, and it made 9% from February 7th. So this was a quick view.
Wait, it's even more impressive because we see that the market is flat as we saw before, but the level 2 ETF portfolio is generating daily return of 0.6% while the market is not moving. I mean, it's really impressive in my opinion.
Yes, and of course, I'm sure one last strategy that we have. It's actually take profit strategy. One of our clients asked us, "You don't really care how many returns we're going to make. You just want to beat the S&P on a monthly basis." So we have generated a strategy that is checking on a daily basis if the portfolio is above 1% of the S&P 500 performance, we are closing the position and selling it and buying the S&P up until the rest of the month, and by that clocking the profit for the entire for the rest of the month up until the next rebalance. And we can find this interesting strategy here as well. And one of the most interesting thing about this strategy, that's out of 52 rebalancing that we have, we actually outperformed the market 41 times. So and lock the profit up until the rest of the month. We can find here all the times that we locked the profit and took the profit from this specific strategy. A really interesting strategy that was asked by one of our hedge fund clients. So if there's any institutional clients among you here in the audience, please feel free to reach us by the website or by my personal email. Okay, so besides the ETF and stocks, the algorithm can be actually identify the most promising investment opportunities also in the cryptocurrency universe. As we can see here, we have more than 170 cryptocurrencies that the algorithm is scanning on a daily basis and give us the best cryptos that we can find and invest in. So this is a few examples for the short time frames of 3 days. We have CKB here that made a crazy return of almost 400%, COTI as well with a crazy return of 400% in 3 days. And we can see here the 1 month on February 1st, which interesting thing that we can find here is the really positive forecast of the Bitcoin and the Ethereum. Those are two of the main major cryptocurrencies that we can find here that the algorithm is actually gave a positive forecast in the beginning of February. Here we can find the return and of this specific forecast.
Yeah, and let's put it in a big picture. You know, the interest rates are expected to go down during this year. of course, it's supporting the equity market. It's supporting also the cryptocurrency market. More and more high risk assets are going up. And here we can see a very interesting example of a cryptocurrency that actually going up right now. It's a very high risk asset class, okay? So please take it into consideration. But we can see how the AI algorithm is able to create a very interesting ranking of the cryptocurrency market and to identify the best opportunities among over 200 different cryptocurrencies. There is no research, there is no traditional research to the cryptocurrency market. And here we are having the opportunity to utilize artificial intelligence that's able to provide us the research to this aggressive asset class. So we can see the, I don't know how to call those returns. It's amazing returns. Of course, please take into consideration the risk that associated with those assets. It's not suitable for everyone, basically. And if we're talking about aggressive assets, let's talk about another interesting investment universe. Every year, Barron's, the investment magazine, is picking its 100 ESG companies. And there is interesting, the Barron's magazine has released its review for the top 100 ESG companies just last week. And there is a very interesting opportunity to utilize the InnoFirst predictive algorithm in order to find the best opportunities among those assets. There is a dedicated package in our website for this universe as well. Basically, every day the algorithm is learning this ESG universe and creating the ranking that we see on the left and the right slide, on the right side of the slide. We can see the best opportunities from the ESG universe. And basically, if someone is focusing, there are many institutional clients, family offices, banks, investment houses that focusing on the ESG universe. And if someone here would like to do that as well and to add the ESG component to its own portfolio, it's possible. And we are suggesting to use our dedicated package for that. I just paste the link to the chat window so you can scroll down within the different packages and you can pick the ESG package if this is your investment strategy, basically. And besides that, there are several more packages within this page. You can find the world indices package. We are going to share live examples of the world indices package during this webinar as well. This is the most interesting part of this webinar. It's possible to receive also daily prediction for the fixed income asset class, the main interest rates, ETFs, and also indices. It's possible to receive daily commodities forecasts. I see in the chat that many of you are trading commodities. Yes, it's possible to use InnoFirst predictive algorithm in order to receive daily prediction for oil, gold, silver, natural gas, you name it, uranium, basically every commodity that is out there. It's possible to receive daily prediction and also to identify the best commodities on a daily basis. I see here that there are some people are trading currencies. Yes, it's possible to utilize the predictive algorithm in order to identify opportunities within the currency market. Every day, the algorithm is generating daily prediction for more than 50 different currencies, the majors and also the exotic ones. And it's also very, very useful to our clients, retail or institutional one. I see several people that asking about Canada. Yes, it's possible to receive daily prediction for the Toronto Stock Exchange. Basically, we are generating stock picks from all the Canadian stock exchange. The European markets are very interesting lately. It's possible to receive daily forecasts and to identify opportunities from the Euronext. As we can see here in the example, it's possible to receive stock picks from the London Stock Exchange. Japan is very interesting during 2024. Right now also, Japan is one of the most interesting regions around the globe. And it's also possible to utilize the predictive algorithm in order to identify opportunities from the Japanese market or any market around the globe. This is we can see here several markets from all around the globe, including China, Hong Kong, you name it. Every stock exchange around the globe is available here. And with India, there is an interesting story that Ben would like to tell you, I think. Is it so?
We did that really interesting collaboration with one of the biggest Indian brokers in Bombay, which actually giving to is the over 100,000 investors the opportunity to actually use the I know first algorithm on the Indian stock exchange, which as we can see here to the right, they actually can use it in their app and trade on Indian stock in different Indian stocks. There's a large stock, mid cap or small cap, and of course they have all the time frames available for them as well. So this is one of the collaboration that we are really proud in, that was launched during the last year. And now, after talking a lot about the past, I think we're getting into the interesting part and what the algorithm think about the future and which stocks and which ETF looks the best for the next month. So I'm going to divide it into two parts. One is the level 1, level 2 that you already know. And we're going to see the best sectors from level 1 and level 2. And then we're going to talk about more about the index universe and see what's going on there. So if we are looking first of what happened from the last webinar that we gave you, those suggestions about the level 1, level 2, the last webinar that was on the 21 in January, we actually recommended on the XLK and XLV, the tech sector and the healthcare. And here we can find the XAG and XHB, and we can find those returns that actually the algorithm made in this actually those performance from the last webinar. XLE, by the way, was the energy was in the bottom of the forecast, and we can see the return was negative from that date. And also we talk about the indices universe, and in the last webinar we talked about the stocks being the strongest sector in this heat map that we can find, and we can see that he actually made almost 13%. We saw the Indian financial industry and the housing sector, S&P 500, which is, I think, most important thing. We actually told you that the market is positive and gonna go up in the next month, and we were right about that. We can find the volatility indices. So this is what we owe you from the last webinar, showing the results that the algorithm has. And now we're going to see what's going on in March. In this specific month, we have a forecast for 1 month ahead. We can find again XLK leading this specific forecast for 1 month. Of course, I deleted the rest of them. We're just seeing the best 3. We can find XLK. We can find the industrial that we saw in the strategy being one of the best sectors, level 1 sectors, and the communication sector, which is also really interesting, that has doesn't look good in the last month, but now the algorithm gives him a good predictability level. The signal is not that strong, but is in the top 3 sectors to lead this month. And in the level 2, if we're diving into those level 1 sectors to find the level 2 industries, we can see the retail, the XRT is one of the leading industries, the semiconductors, XSD that we find here. Those are marked by yellow by me, by the way, and that's because the high predictability level, and they have a good signal as well. So those two, I think, is going to lead this month best industries. XBI is the biotech industry that also look good, and XHB, the home builders, that show us a pretty good return so far, and still looking pretty strong in the next month by the algorithm. And let's talk about the indices forecast, which I found it really interesting. As we can see here, for the next month, the semiconductors is still remaining the king of the map and leading the forecast and being in the top of the table. We can find the Nifty PSU, still financial sector in India is looking pretty strong. We can find Japan here, Nikkei 225. We can find the housing sector is still leading the heat map. The best index in the US market right now, it looks like the Nasdaq is one of the strongest indices, as well as the Russell 1000. We can find it right here. We're seeing a lot of Europe stocks for stocks 50, Euro stocks 50, or in the DAX here. As Yaron said, we can see the European stock exchanges getting stronger in the forecast and going up until the top of the forecast. Nasdaq 100 also looks pretty good for the next month, and S&P 500 is still positive, as we can find it here. FVX is the 5 years interest rate. It's not in the top of the forecast, but it's still green. And then if we are taking a look for the bottom of this specific forecast, I divided into two. We can find the volatility VIX and VXN being in the bottom of the forecast, which means that the volatility is supposed to get lower and lower next month, which is good to the for the stock market, basically. And we can find it KRX, which is the regional banks in the US. In a multiple time frame, we find it pretty negative. So try to avoid a regional bank in the US. So that's the general picture for the next month by the algorithm. This is the live forecast from today for the next month that the algorithm provide us for March.
What about NVIDIA, Ben?
That's the surprise that we saw in the end. Interesting to find that from the Magnificent 7, here we have Magnificent 8, but the Magnificent 7, NVIDIA is still leading the forecast, and we can see the result actually from today. Google is in the red part, as you can see here in the bottom, and the performance from today before the beginning of the webinar, once NVIDIA went up by 3.6, while Google went down by 3.4. So
right now, NVIDIA is up by 5.3%. And talking about this Magnificent 8 package, this is a new package that's available in the link that I have placed in the chat. This package includes daily predictions for the Magnificent 7 or 8, you name it, stocks, as well as the main indices. We can find here daily prediction for NVIDIA, Meta, Netflix, Amazon, Tesla, Microsoft, Apple, and Google, as well as the main indices in the US, S&P 500, NASDAQ, Dow Jones, Russell 2000. And it's a very good stock market intelligence tool. There are several institutional clients that are trading only those 8 stocks, and they are utilizing the predictive algorithms to trade only those 8 stocks. And we have an excellent example from today. We see on one hand a stock that the algorithm gave a very strong signal, NVIDIA, that's jumping on the other end, we see Google that's struggling. On the very same day, we see 8% daily difference in the performance between those assets, and it's very, very interesting in our opinion.
Yes, and for this specific webinar, we have gave you two interesting sales. First, we are giving you actually 30% off from all the packages that we have in our website. You can find it at ironoverfirst.com, and using the coupon webinar 3. This is available for 24 hours only for the webinar audience that have been with us up until now. And another really interesting sale. This is buy one get one for $299 per month. You can choose out of the different packages, the two packages that you wanna be in with this month. For $299 per month. It's a great deal, and it's again available up until tomorrow for 24 hours from today. Two interesting sales that we suggest you to check. Yaron will send the links.
Yeah, the link is already in the chat window.
In the chat, and to avoid all the questions that we might get in a few minutes, we tell you our specific picks. I think combining, for example, the ETF package that helps you to know which sector is the best to be in right now, and the S&P 500 package, which you can focus on those stocks that from the specific ETF package can be a really good combination, and to pick the best stock out from the algorithm forecast that will send to you on a daily basis. Of course, you're getting those two packages for $299, and Yaron picked.
Okay. Yes, I want to tell them. Okay, I wanted to choose the S&P 500 as well, but Ben was quicker this time. So I'm suggesting to utilize, it's a risk-on market. So the top 10 package could be a good option as well. Ben, can you tell us the difference between the S&P 500 package and the top 10 package?
Yeah, the S&P 500 package, of course, is focusing only on S&P 500 stocks, while the top 10 package, the algorithm actually chooses stocks from the entire US market. This package is a little bit more volatile from, of course, the S&P 500 package, so you have to take that in account. But again, you have different varieties of opportunities there. The risks are a little bit higher.
Correct.
But you have a really interesting investment opportunities in this package.
Another advantage of the top 10 package is the fact that you are receiving daily S&P 500 forecast as well. So not only you are receiving the daily top 10 stock picks for both long and short for multiple timeframes, you are also receiving daily S&P 500 forecast for multiple timeframes. And we saw that XLK is supposed to dominate the market during the next month. As my second package, I do suggest to pick the tech package or the big tech package. I think it's a good combination. The ETF package that you have chose is another interesting suggestion that I like. To utilize the AI algorithm and just to focus on ETFs, a lower risk, and it's a good combination with the S&P 500. We already mentioned during this webinar, we believe that this year the main contributors for the S&P are not going to be necessarily it's not going to come from the Magnificent 8, and it's going to come from the tier 2 companies. as we see in our portfolio, in our live portfolio that we have just shared with you, basically.
Right. So again, I reviewed really quickly. We have one webinar sale that's giving you 30% off from the normal price using the coupon webinar 3, again for 24 hours. The second sale is the 1+1 for $2.99 per month. You can buy and you can choose any two packages that you find interesting from the packages list that you have there. And of course, no commitment. You can take it for 1 month only just to try it, 2 months, 3 months, and whatever you like. So those two sales are available for the next 24 hours.
Let's answer the questions.
Oh, wow, 100 questions.
100 questions and still counting. Okay. There is one question that related to the 1+1 sale, the sale number 2. And this promotion is a lifestyle promotion. You will get this $2.99 per month price for your lifetime. It's not limited for the first month only. The coupon code is available and it's going to provide you a discount for the first month. This is regarding the first sale.
Yeah, important.
It's important for you. So it's another, that's why, and it's also giving you the opportunities to explore different packages to have on one hand S&P, for instance, package and to combine it with an ETF package. So you can combine different investment strategies within one, basically one package. Okay, let's
see.
start.
Yeah, other question. If we have any crypto packages, yeah, we talked about it. More than three crypto packages. You can find it in the website, and it's really interesting time from the crypto universe, I think. But you can find it there.
Yeah, if you will open the second link that I've shared with you, just scroll down, you will see several cryptocurrency packages that can assist you in the crypto. Wow, so many questions about crypto. Ben, let's buy Bitcoin.
Yeah, I already have one.
Okay. Okay, the next line is on you.
Is there a package for let's see, question about crypto, yeah.
Okay, someone is asking about the Canadian package. Please send us an email, and we will help you to find your right package for the Toronto Stock Exchange. Another question about crypto, we have answered that.
I see some question about
please.
the strategies. Why holding one of the stocks in the portfolio? We didn't hold one of the stocks. We hold in this specific strategies. We have 40 stocks and 20 stocks, and those strategies are by the in the standards of our clients that ask us to hold a number of stock or trade a different number of stock each time. So we don't have 100 stocks in this portfolio. What we saw was an example of 40 stocks and 20 stocks. And that's regarding the strategy. A lot of compliments. Thank you for the interesting webinar. Let's see what a lot of questions. I don't think we're gonna go through all of them, but let's see what's something that we didn't answer.
Your wife is in the crowd today, because I see a lot of compliments. Huh? You ask your wife to log in? No?
Like every webinar.
Like every webinar? Okay.
Okay. They ask about how could how to pick the best stocks from the forecast, and it's an important question. Sorry, so I'm gonna repeat it again. When you get the forecast, try to focus on the longer time frames. For example, the 3 months time frame. Even if you're trading for the short time frames, start by looking on the longer time frames for 3 months, for example. Then focus on the high predictability stocks. Choose the stocks that have the highest predictability level, and then focus on the stocks that are in multiple time frames. Those are some tips that will help you to focus on the right stocks from this specific forecast. And because as you saw in the strategy that we presented you, predictability is really important from the algorithm point of view. So focus on the most predictable stocks, give it more weight even than the signal, but try to find those two indicators in their higher levels and choose stocks that are in multiple time frames. Each and every time frame is independable, so I think it's important to repeat that as well.
Yeah, there is a question if it's possible to change if they're utilizing the 1+1 package. Is it possible to change it from month to month? The answer is yes. It's possible to change it every month. Every month you can choose different package. You can go basically and you can explore all the pricing page basically. Is it possible to receive the daily prediction as a CSV file or via API? Yes, we do have a solution for that as well, of course. For institutional also, it's possible to receive the prediction in a secure FTP via secure FTP connection. Yes. More interesting packages. There is a lot of people understanding the predictability, but they're asking about the signals. Maybe you can quickly explain what is the signal?
Yes, again, the signal is the let's say potential movement of the asset. It's the price deviation. We are looking, of course, for the higher signals, and it's actually this index this internal index is helping us to rank the entire universe of different assets. So, for example, as Yaron said at the beginning, by knowing the ranks or the signal of each of every asset, we can know in which area of the universe we can actually focus. And even in this specific country, which are the best sectors to be in. And in this sector, we can dive in which are the best stocks to buy. So signal it's an index that helps us to rank the entire investment universe. And we are looking for higher signal as much as we can. As well, do not forget again about the predictability indicator, which is important as well.
Yes, some people are struggling to locate the EST package. I just pasted it in the chat as well, so you can utilize it as well. Okay, let me see more questions about the S&P 500 stocks. We spoke about that. There is a dedicated package about that. Highly recommended. More questions about small caps. Yes, we do have a package with for under $10 stocks. We have a package for under.
Amazing, by the way, from the last 2 weeks.
Yeah, which works amazing. It's a risk on market, and of course the small caps are also flying during this time. I need to say there is a risk associated with those stocks. So please manage your risk. I'm not advising to invest 100% in small caps. Another compliment you are receiving here from another wife, maybe that you have. How many wives do you have, Ben? Okay, let me see if there is another. Yes, Okay, this is important point. Another question: when do we receive the prediction? The prediction is being sent on a daily basis before the market opening, few hours before the market opening. When you're waking up, when you're turning on your computer, you're supposed to see the most updated prediction if you are located in the US. More than that, the prediction for Monday is being sent already on Sunday. So you can trade it in pre-market or if you are receiving any errors during the time that you trying to subscribe, I paste already the direct link to the chat box. I see a question from the same user, so I suspect there is an issue with your PC. Anyhow, I added the link, the direct link to the ESG package in the chat box, and I will add also the crypto one for you, just for you.
Okay. I think we answered most of the questions, not all of them, but most of them. And of course, if you have any other questions, feel free to write an email to us or using the chat box that's in the website. We'll be happy to answer your questions. So I must thank you for listening and being with us like almost 2 hours.
Wow.
Wow, yeah.
Time flies when you're enjoying, right?
So thank you very much, guys, and I hope to see you in the next webinar that we have.
Yes, and Ben, thank you very much for the super interesting webinar.
Thank you.
And see you next month.
See you next month, guys.
Okay, thank you very much. Thank you for the compliment in the chat box. Thank you, guys. Appreciate
Bye-bye.
it. Thank you.